Welcome to today's Explainer. We're tracking a really fascinating shift happening right now in precious metals. Looking at the gold and silver price today, May 6th, there's a huge pattern unfolding. Gold just surged 1.41%, sitting right near $4,633, and silver is up 2.49% as the US dollar weakens and Brent crude slips. So today, we're going to break down exactly how global geopolitics, energy markets, and currency fluctuations are all connecting like a giant puzzle to drive this massive trend. Let's dive in.
Now, the magic number anchoring this whole trend is $4,633. That is the wild high the COMEX gold rate reached today, and it's holding remarkably strong above that $4,600 mark. When you see a massive threshold like that crossed internationally, well, it tells us that something fundamental is shifting under the hood of the broader economy.
And guys, this isn't just some slow, gradual climb. In the domestic market, gold logged a staggering intraday gain of right around 4% compared to the previous close. Silver, it jumped 2.49%. For anyone out there watching their portfolio, these sharp, sudden intraday movements are a huge signal. It shows that buyers are stepping in incredibly fast and totally shifting the momentum.
Section 1. The Precious Metals Surge. To really see how this plays out domestically, take a look at the MCX gold rate. What we have here is a classic gap-up opening. Just to put it in perspective, the previous close was 1,38,912 rupees, but then it opened way up at 143,079 rupees. It literally leaped over thousands of rupees in valuation before trading even really got going, eventually touching a day's high of 144,434 rupees. That massive gap? That's the market reacting instantly to overnight global events.
Section 2. Falling oil eases fears.
So to understand those overnight events, we have to look at this fascinating global chain reaction. It connects Middle East diplomacy straight to your bullion portfolio in 4 clear steps. First up, reports of a US-Iran ceasefire plan hit the wire. Second, that news causes crude oil prices to slip below $90. Third, as oil falls and global tensions ease, the US dollar tumbles. And finally, step 4, that weaker dollar, combined with easing inflation fears, causes gold and silver to absolutely surge.
Let's look a little closer at the specific geopolitical triggers kicking off this entire chain. According to the source reports, the Trump administration offered a 15-point ceasefire plan to Iran. This plan was reportedly submitted by intermediaries from Pakistan, who basically offered to host renewed negotiations between Washington and Tehran. At the exact same time, the U.S. military prepared to call up at least 1,000 more troops to supplement the 50,000 already stationed in the Mideast. These simultaneous diplomatic and military moves really signaled a potential shift in those immediate regional tensions.
And the immediate market reaction to those easing tensions? A sharp, sudden drop in oil. WTI crude oil prices slipped right below the $90 per barrel mark. You see, when the threat of a major supply disruption in the Middle East starts to fade away, the risk premium that's built into the price of oil just drops right along with it.
Now, here's the absolutely crucial part. How does cheaper oil mechanically boost bullion? Well, falling oil prices act like a giant pressure release valve on inflation fears. Think about it. If it costs less to transport goods and run factories, overall inflation cools down. And when inflation cools down, it puts the very real possibility of the U.S. Federal Reserve lowering interest rates right back onto the table. This is key, folks, because when interest rates are cut, non-yielding assets like gold and silver become highly attractive to investors looking for a safe place to park their wealth.
Section 3. Geopolitics and the dollar.
I want you to think of this next part like a massive global financial seesaw. On one side, the US dollar index tumbled down to around 99 following those ceasefire reports. On the exact opposite side, gold demand rises. Why? Because gold is priced in US dollars globally, so a weaker greenback actually makes gold cheaper for buyers who are using other currencies. That built-in discount acts as a massive invitation for international buyers, which naturally drives up demand.
Section 4. Expert Outlook and Targets.
Anuj Gupta, a CBI-registered market expert, perfectly summarizes the macroeconomic sentiment driving the domestic market right now. He notes, and I quote, MCX gold rate is rising as the market is expecting a US Fed rate cut amid easing inflation fears. It's a crystal clear confirmation that the market is currently trading heavily on the anticipation of what the central bank is going to do next. And of course, that's influenced directly by the drop in oil we just talked about.
Looking ahead, Moody R., the CEO of Enrich Money, points to a really optimistic ceiling for international targets. He states,
A sustained move above $4,550 could push the COMEX gold rate toward $4,700 to $4,750. So what does this mean for us? It suggests we might actually be looking at a sustained push toward brand new thresholds, rather than just some temporary spike. Now, for those of you actively tracking the domestic MCX rate, there are a few critical technical levels you definitely want to watch. On the downside, immediate support sits between $134,000 and $135,000. If this crazy rally continues, the next target on the horizon is $146,000. But the really crucial number to keep a close eye on is $155,000. Experts are noting that this specific level might act as a heavy resistance point.
You might be wondering, why would that 1.55 thousand rupee resistance hold? Well, it's because of a really fascinating counterforce. A falling US dollar plus falling crude oil actually strengthens the Indian rupee. Since India imports a ton of oil, cheaper oil boosts the national currency. And because gold is globally priced in dollars, a stronger rupee means it literally takes fewer rupees to buy the exact same amount of gold. That currency strength is exactly what could limit domestic gold's upside, creating a real tug-of-war between global commodity prices and domestic currency.
Which leaves us with one final major question to ponder. Will the US Fed actually cut rates and throw more fuel onto this trend, or will that crucial resistance hold strong as domestic currencies strengthen? This tug-of-war between global momentum and technical ceilings is playing out right in front of us. So keep a close eye on the dollar and oil prices to see exactly how the next domino falls. Thanks for joining this explainer, and we'll see you next time.